Well, guys, it's been a while since we've had to discuss this chart, central bank liquidity. But as it turns out, it looks like it's back on the rise. And contrary to what we just saw from the Federal Reserve and Jerome Powell, they are trying to support one particular market. Can you guess what it is? Well, in today's video, we'll take a look at it together, along with what's happening on the most important market sector, semiconductors, as they continue to see weakness. And of course, everybody goes towards safe haven demand. The US may not be the number one market anymore, according to some people. Today, we look at the bankruptcies that are on the rise and why everyone is choosing a couple of shiny metals. Let's go through stocks, commodities, and cryptos to see what's next for markets. Join us, guys. This one's not to be missed. Well, welcome back everybody to The Daily Show. My name's Tom, and in today's video, we have a lot to discuss together. The latest macro, the big data, the dark pool liquidity, the options flow, and then of course, the bankruptcies and what Jerome Powell just said. If it's your first time here, remember to subscribe and smash that like button if you love markets like we do, as we do this on a daily show. But on top of that, we've got some amazing stuff to share with you. So let's jump into it straight away and have a look at that correlation that we've used several times before, which is NVIDIA versus Cisco. Are we in some type of dot-com boom to bust that we don't even know about yet? And yes, I know the argument here is, of course, totally different when you look at valuations. One thing that is pretty similar, though, seems to be the overlay chart. If you take 1996 all the way to the 2000s boom and then bust, you'll notice that Cisco and NVIDIA seem to be following a very similar path. And that begins this most important level. If we start to lose structure around here, then of course we will literally be on the recessionary path and things really will be dire. But if markets are able to regain certain highs that we'll look at later on today's video, that could be a huge deal. So let's break down what everybody is saying. And of course, we'll start off here with JP Morgan and their latest call. We posted this over on our X account, links in the description down below. But basically, it's more of the same. Bank of America, Goldman Sachs, JP Morgan, everyone's downgrading the US. And now they're saying their worst case scenario is 4,000. I tend to believe the worst case is much worse than 4,000 if things really go bad. But either way, they've downgraded it. And now their base case is 5,200, funnily enough, exactly where we pretty much are at the time of this recording. And their bull case is 5,800 by the end of the year. So what they're predicting is up, down, and all around, basically this all the way through to the end of the year. Now, will that happen? Well, let's take a look at some of the things that Jerome Powell just mentioned over the last 24 hours in his meeting. Now, basically, we saw here a very interesting comment. Jerome Powell was asked if the Fed will step in and support the market. Basically, he said, no, I think the market is functioning as it should be, even with the current uncertainties, obviously talking about the tariffs. And he's basically saying no bailout is coming for the stock market. But that being said, as we've seen recently, there are signs of liquidity increasing in markets. And particularly, we think that Jerome Powell will be supporting the bonds market. So will there still be a plunge protection team? I think whether that's, let's say, the administration or it's Jerome Powell, clearly something will be going on because we already saw someone blink and we are starting to see central banks around the world pay a lot of attention. Have a look here, particularly at the new all-time highs. Almost every central major bank in the world is actually pumping M2 money supply. And a lot of people liken this to Bitcoin, as there is some correlation we'll look at in some upcoming videos. And of course, they also liken it to certain things like gold and other markets going up. So the US monetary supply looks like it's actually going to a new all-time high. We've got China absolutely pumping, which is part of the reason we've been so bullish on market structure. And as you guys know, this is often the early stage of forming a base support. Now, that doesn't mean we can't hit 4,700 on the SPY together. You know, obviously that could be hit, or we might actually make new lows as that would actually entertain. But it does mean that generally speaking, you're looking at high volatility to create some form of structure. And this is where our concept of patience, react, don't predict comes in very clearly over the next coming sessions. Now, Japan and Eurozone and UK and Germany and everybody else also are doing something very similar. So it's a very interesting thing to track. And obviously we will be tracking M2 money supply along with other liquidity injections over the next coming weeks and months. Now, another thing is, have we actually hit extreme fear? Well, you can see here on this chart, if you're taking just the AAII sentiment surveys, which obviously we have for a long time, then yeah, we've kind of hit maximum fear. But one of our good friends here, Grant Hawkridge, has gone through, and what he's actually done is he's looked at all of these reads together, including put-call ratios, bull-bear spreads, NAIM reports, etc., etc. And he's actually put them in with all of the great lows. And I think this is an excellent chart because what it shows you is that we may have hit the extreme low, but if we're going into, let's say, some form of recession, significant pullback that's going to last, then we're not quite at those extreme periods. So, of course, there is more room to potential downside from that aspect. That being said, a lot of the temporary low periods are coming up. So I'd be looking forward to seeing the next week or 2 weeks worth of these reports. And hopefully Grant, I'll have a chat to him, will continue to make this report for us so that we can therefore share it with you guys and be pretty clear whether we've actually hit a rock bottom low in that aspect. A really cool chart, well worth checking out. Now, what about first quarter bankruptcies? This is going to shock a lot of people. Bankruptcies are up big time, and you can see we are now at the highest level of first quarter bankruptcies since 2010. Now, this may look at this point, wow, shocking. Of course, you think, wow, bankruptcies are up, tariffs are taking control, market's screwed, everything's bad, nothing's going to work out. But you do need to remember to put things into, of course, some form of, okay, is this normal to see bankruptcies up quite a lot? And you can see here, yes, it is, although it is elevated here, no doubt, in 2025. It'll be interesting to see how the lower level of bankruptcies that tends to come through April, May, and June tends to come through this year. But yeah, bankruptcies are increasing. And obviously the real case of where bankruptcies are expected to spike, at least in our eyes, is going to be the back of this year, third quarter, fourth quarter. And that's going to be because there are so many refinance companies coming up that need to get backing. And that may be very difficult in the current environment. So are there still some good cases for the markets right now, even though they've pulled back to 5,200? Well, it turns out there are a lot of options sitting here, but also CTAs are still expected to be a buyer during, of course, the month of April. And we are also on those kind of, I say narratives of the 1960s or 1990s period where you might say, okay, yes, we've hit the level based on the Cisco chart, but we also have overlaid very nicely so far with both the 1960s run and the 1990s run, as this is a dip that is therefore bought, but it is still near the end of a serious cycle run. So you've got to remember in both of those cases, even if we do follow a new all-time high, you can never forget what we've just seen here this year, because luckily, well, not luckily, generally this is where the damage has been done. So actually damage gets done, markets still go on like nothing's been happening. Everyone thinks, oh yeah, it's all good. And then it's really not very good at all. Now, if we are to see a market go towards the V shape and recover, this is around the level that we tend to see it. Now, you might think, of course, the last 24 hours, things got really wild, but you've got to remember that we're in a structural zone of 1,000 points. And you would say, what are you talking about? It's 1,000-point structural. Well, we're in a VIX plus 30 environment. So yes, we are in that type of structure. The way that this plays out over the next 1 to 1.5 months could be the most important level. And we've said this for now, literally a month. So we knew this was going to be an important level. This area here will matter to the recessionary structure, which we may actually already be in, or of course, the recovery structure. And this is really where we're going to see stocks like NVIDIA, semiconductors, and of course, many others hold up or not. In terms of people fleeing the US, the storyline at the moment is, of course, the end of US exceptionalism. I don't believe that happens overnight. So, I think that this story is getting blown out. I've seen this story run many, many times over the last kind of 15 years. And of course, it's always been wrong so far. You may argue that it could be having more merit this time. And no doubt these reports, the latest ones here from Bank of America, are showing you April 25. But do you think it's the end of US exceptionalism in terms of companies and stocks? I'd be interested to know what your opinion is in the comments down below. Maybe we'll do a poll on it soon to see what people's thought process is. But in general, these are the forward-looking indicators that people are using. And you can look at these and say, oh, yes, things look pretty dire. But at the same time, again, price will be everything. And what we're looking for